Hello everyone, this is the pre-market report video for today 9th February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Apologize for not making pre-market video yesterday. Anyway, let's get into today's video. First, quickly what happened in US last night. Then the usual, we can discuss about the Indian market like what RBI governor said etc. in his press conference. I don't know why last Tuesday US market had a quiet day. Then yesterday it rallied, but I haven't made the pre-market video. Now last night again US market had a quiet day. So, two pre-market in a row, I'm saying US market was very much quiet, very unusual. I mean, on Tuesday in S&P 500, the difference between the day's high and low was 20 points. That itself, it's very much flat. Now, last night, the difference was even lower, just 13 points. 5 points on the positive side, exactly enough to cross the 5,000 mark. And on the downside, it's 8 points. So, it's more of a flat line. On Wednesday night, S&P 500 increased near 1% because the demand for the 10-year note auction was less, which means US investors were not preferring the safe investment options. Hence, S&P 500 gone close almost to 5,000 but not, and it closed at 4,995. Now, last night for the first time in the history, S&P 500 hits the 5,000 mark, but again it dropped back and closed at 4,997 mark. Because it's near 5,000 mark for the first time, both buyers and sellers side got equal weightage. For example, as a strong negative, JP Morgan released the report that they expect stock prices to correct at least 20 to 30% from the 2024 peak. And for the positive side, Conference Board's US CEO Conference Index for the first time in the last 2 years comes as above 50. Exactly, it's 53. In comparison with the last third quarter, it came as just 46. So from 46 to 53. This Conference Index is also like PMI data. Anything above 50 means CEOs were more optimistic about the future economy. And that supported the US market. So basically, positive news cancels the negative news. And in the end, US market closed mild positive. Dow Jones increased by 0.13%, S&P 500 was marginal positive 0.07%, and Nasdaq was up by 0.23%. Then US VIX decreased below 13. The takeaway is, from my perspective, US market might be in a crucial junction and possibly in the short term it might make a big move. It can be either on the upside or can be on the downside. About oil, Israel didn't agree on the de-escalation and Europe had their first sudden drop temperature of 5 degrees across, which all subsequently resulted in increase of oil price by over 3.5%. At the time of this video, WTI crude trading at $76.5 US per barrel and Brent crude trading at $82 US per barrel. Coming to Indian ADR, it had a disastrous day. All four major Indian ADR stocks closed significantly higher negative than the Indian market. Both banks over 3.5% and both IT stocks around 1%. Regarding the reasons, in a moment we'll discuss. Then in terms of GIFT Nifty, at 3 AM Indian Standard Time, it closed at 21,774. The premium was reasonable around 60 points to the spot market. So today morning closing kind of indicating flat to 50 points gap down opening. The reason why I'm saying this wide band is, yesterday Nifty closed at 21,760, but the aftermarket recalculation dragged it down by 40 points to 21,717. So it will readjust it in the morning opening and sometimes this will trim the negativity. So that's the overall about the global market. Now let's move to the Indian market related info. First, what's important info from the yesterday's market? As most of us know, RBI paused their interest rate decision and the RBI governor held the 1-hour press conference. After that, as a result, Nifty dropped over 300 points and it mainly dragged by the private banks. I mean, on the outside, as a bank Nifty whole, it dropped around 2%. But if you look deeper, actually PSU Bank increased to 2% yesterday and private banks dropped over 2.5%. Since in Bank Nifty, private banks got more weightage like near 75%, hence the index dropped. Now, one might ask, why private bank, not PSU bank? If the interest rate pausing was bad, then it should be equally bad for all the banks, isn't it? The answer is yes, and it's neither positive nor negative. The real reason for the negativity around the private bank was in the press conference. I will attach the link in the description below. If anyone fancies seeing the full 1 hour video, please have a go. But I will highlight the summary. Whole press conference questions and answers were around two things. One about Paytm, two about liquidity deficit. First about Paytm, Indian press asked various questions like why RBI took action suddenly, what's RBI stance on Paytm, is there any offenders? Complying the full and all the regulation is very much expensive for all private sectors. This includes both banks and NBFC. For that, RBI governor and deputy governor answered that they don't want to answer with respect to particular entity, rather they answered in general. Usually in all the complaints related issues, both the parties such as supervisory committee and the affected entity will engage in months and months of detailed agreement, conversation, and RBI committee will also provide the adequate time to correct the action. If they didn't take the corrective action means, then only RBI supervisory committee will proceed on the next action, includes the suspension. RBI strongly believes that this kind of strong corrective action is very much required to have a stable financial system. Then for the question, is there any offenders? Again, here the question is not just for PAN card related Paytm issue, it's the broader questions. Complaints issues includes not maintaining the capital adequacy ratio, not maintaining the mixed percentage loan portfolio, etc. In the mixed percentage loan portfolio, we already know the one huge offender, it's HDFC Bank. When the merger came in act, they got huge retail loan which RBI did give lot of warnings. Anyway, as expected, they said yes, but not the major issue, and they are working with the other banks to resolve the issue. Then the final question, implementing all the regulations will be expensive. For that, he said RBI is working with the entity to create an innovation method to reduce the cost, but either way, RBI want to enforce all the regulations strongly despite the cost increase. Here, in this case, most of the public sector bank mostly comply with the regulations since they won't chase for the profit or neither chase to increase the business at the expense of compliance failure. So clearly, this first regulation follow and implementation correctly not in favor of private banks. Then the second one, liquidity deficit issue. Again, here this issue is applicable to most of the private banks but not that much on the PSU banks. So basically, banks asked RBI governor that already RBI is keeping the interest rate at higher level to control the inflation. Then why don't they just increase the liquidity which will solve the private bank's problem? For that, RBI governor mentioned that the full year inflation expect to be around 4.5%, which is above 4% RBI's target, and he agrees that interest rate is the primary influential tool to control the inflation, but he did use the liquidity as the secondary tool to control it. So, as long as inflation is above 4%, RBI will control the liquidity with cautiousness, and if emergency support required means, then RBI is ready to perform OMO and VRR etc. to support the liquidity concerns in the banks temporarily. But as a permanent correction, they want organically either government spending to increase or to the public spending to increase. So that's the whole press conference summary. Lack of support from RBI on both regulation case and liquidity issue caused the fall in private banks. About institution, FII net sold for mega 4,930 crore rupees and DI did net bought for massively 5,500 crore rupees. So overall, as a summary, US market closed neutral, but lack of support from RBI for the growth weighing down the private banks. In line with that, all ADR indicating the flat to negative trade, and GIFT Nifty based on the premium, it's indicating the gap down opening of 0 to 50 points. Moving on, as per stock open interest, Britannia Industries, Bajaj Finserv, HDFC Life Insurance, Nestle, HDFC Bank and ICICI Bank got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Power Grid, Alchem Lab, Apollo Hospitals, Page Industries, HAL and Bosch got an increase in open interest with a positive price close indicating the long build-up. About the things to look out, Hero MotoCorp, Tata Power, Alchem Lab, MRF, Pfizer and Pi Industries are some of the major Indian companies' earnings results are still released today. In terms of macro, as far as I know, Germany's consumer inflation is the only item I think we need to keep an eye out today. Coming to technical, Nifty opened 80 points gap up above 22,000, but after RBI press conference, it dropped 300 points and closed negative 212 points. Thus, on the daily chart, it formed big negative opening Marubosi candlestick pattern. Even though it's a long red candle, the bearish trend on the candle pattern is very low reliable. Hence, generally, it's a neutral candle. Other than the candle, now Nifty made a multiple attempt. Despite that, it's unable to surpass the resistance zone 22,000 to 22,150 and it had a sharp decline. Thus, now hourly momentum indicator has triggered a negative crossover while the daily momentum indicator is still in buy mode and thus overall it's a divergent signal. This could lead to consolidation from short-term perspective. And on the downside, the 20-day moving average 21,694, it provided the much needed support yesterday. If it drops below, then the strong support is around 21,500 to 21,400 levels. And the upside will be limited as long as it trades below 22,000 mark. In case of Bank Nifty, same as Nifty, it failed to hold the opening gains and closed over 800 points down. The critical support zone 45,500 has been breached and is now expected to act as a resistance level. And the subsequent support is positioned at 44,400 and a break below this level is likely to intensify selling pressure, potentially lead the index towards 44,000 mark. On the weekly options front, the maximum call option open interest was at 22,000 strike, followed by 21,700 and 21,800 with meaningful new call option writing at 21,700, 21,800 and 22,000. Thus, from the options data indicates that 21,700 expect to be the trend decider and near-term resistance is at 22,000. Whereas on the put side, the maximum open interest was at 21,700 strike, followed by 21,500 and 21,600 with new put option writing at 21,700 strike, then 21,600. Hence, the immediate support is at 21,700 and the strong support is at 21,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.